There you go. So we are on record, guys. Thank you so much for the Q&A with Erik Timmermans. This is a 3-year event. I have to mention that everything I say or do or mention is for entertainment purposes only. Make sure you do your research. That is just to make sure that you cover yourself and so on. So, hi. I wanted to dive more than ever. I really wanted to dive into the data. I don't know for you guys, but July felt awfully slow. I hear a lot around me from fellow builders, from other people, that it is, nothing is moving. What is going on? So wanted to dive into the data. So I have a few slides I want to share with you. I'm going to tell you some data right now. But the pending home sale. So first of all, home prices rose again, which is amazing to me. Right? Like when transactions are going down, but home prices are rising. That is, again, for me, that is again a confirmation that inflation during an inflationary period, during an economic uncertainty in the market, the best thing to invest in is hard assets, and real estate is a hard assets, and you see that rising. I don't know for you guys, but my stocks are dropping, so I guess more and more people are getting into the real estate market. There's a few people on this call that have asked me, how do I get started in real estate? And I always keep telling people this is the best time, right? And we dive into that in a little bit. You guys have heard me say that, but it's the best time because if the stock market is not performing, people are looking for people like you and me that are operators. We're called operators, and operators can give them a better return on their money than the stock market can. So therefore, this might be the best time to get started. Transactions are they fell. The overall transactions are down month per month by 5.4%. Home prices fell across all of America year over year. So we're definitely year over year seeing that we are losing a lot of potential buyers. Look at the unemployment rate, right? People are saying, and I'm going to dive into that in 2 different ways. People are saying that AI is impacting the unemployment rate. It's not impacting the unemployment rate, but it's impacting the 10-year treasury, and the 10-year treasury is impacting your mortgage rate. So home prices last year in June of 2025, unemployment rate was at 4.1%. Last month I have to explain. In August, I'm talking about June. In September, I'm talking about July. That's just how data works. Like data comes out by the end of the month. So by the end of July, we got data for June. So that's why we have this meeting. We're always a month behind. So in June, unemployment rate was 4.2%. In May, it was 4.3%. In June of last year, it was 4.1%. Nothing to worry about. So how is AI then impacting your mortgage rate? So you know all those data centers, right? AI data centers, Amazon data centers, Facebook data centers, all of those data centers. Those data centers are built by private money. And you're talking about billions and billions of dollars. So normally, I don't know what the exact number was, but normally it was in the single digits, like 1 or 2%, that private money was invested in large companies, Amazon and Facebook. Now it's up to 18%. So billions of dollars are not going to the treasury stock, but are going to corporations that give investors a higher return because the uncertainty is higher, right? If you invest in a 10-year treasury, you get somewhere around 4%. We dive into your 10-year treasury here in a minute. But a Facebook and an Amazon will give you a higher return for your money. So all of those people that have billions of dollars that are sitting there are now like, oh, I can go to Amazon, and Amazon will give me 6-7% to build a data center. So instead of buying a 10-year treasury from the government, I'm just going to buy a stock in Amazon, and they give me a return. So what you're seeing, like, you can only spend money once, right? I was almost going to say you can spend money twice, but that's That's maybe how my wife thinks. But that aside, still see this recording, and I'll be in trouble, guys. I'll be in the doghouse again. But anyway, so you can only spend money once. So those people that are now, the 1 or 2% of people that used to invest in large corporations is now over 18%. And you're talking about billions and billions of dollars are not going to the 10-year treasury anymore. They're going to data centers. That is really impacting our mortgage rates. That is the biggest impact we're currently seeing on mortgage rate, and why the 10-year treasury is not dropping. And if the 10-year treasury would drop, mortgage rates would drop. So that is what we are up against. Also, we are now that I have to say today oil prices dropped again. But housing market with the current interest rates at 6.6%, almost flirting with the 7% again, interest affordability in the housing market is at the worst levels ever recorded in a decade. So we are, 75% of Americans cannot afford a medium-priced home. 75%. And you've heard it. You've heard me say this when interest rates by the end of February dropped to 5.9%. We saw in 1 week, just 1 week, we saw an uptick of 30% in new mortgage applications. Interest rates going up, data centers, and the war is not helping real estate, guys. That is a true issue. So let me start sharing some slides here with you. The first slide I want to share with you. Well, it's about oil, because oil is impacting. No, this one, but then I need to go to this one. So oil prices. I'm working off of one screen, but you guys can see the oil price chart. Yeah, perfect. So oil prices today are dropping again. A big drop. It's because we don't know if there's an agreement, but the president said there is an agreement. There seemed Israel and Iran seem to disagree on that. Whatever, it doesn't matter. Oil prices for that reason are currently dropping. That is good for that's good for interest rates. It's good for mortgage rates. Yes, that doesn't mean that data centers are not being built, but it means that inflation might come down, the uncertainty comes down, and both have always, data centers and the war, again, have always been pushing up the interest rates. Other article I wanted to share with you guys is an article I saw today that the luxury homes are thriving in America. So luxury home sales are up 4.7%. I've always said it. And it's always the reason that I said, hey, I'm moving into the luxury home field, because it's an area where I feel that people have the money, and if they have the money, they are not as hard impacted by the current mortgage rates, right? We're talking about that less 25% of people that can still afford a house. And here is a Triangle Business Journal article that is exactly highlighting this, right? Like luxury home prices in Tampa rose by 15%, Miami 14.2. Unfortunately, Raleigh is not on the map yet, but Raleigh was outpacing Austin at some point for wealthy people moving into the area. And if you follow me on Facebook, Raleigh recently, if you like it or not, but Raleigh recently moved into the number one spot for people of a state where people are moving to. So we kicked Texas and Florida to the curbside, and we are now the number one position. Is it good? For us as investors, that is great news. For us as citizens of North Carolina, that means that can be terrible for traffic. All right. I normally show you the NAR data, and I'm showing you NAR data now as well, but I wanted to focus on North Carolina. We as North Carolina people, we have shown in 2008 particularly that, yes, the real estate market kind of impacts us a little bit, but not as big as we think. It is very centralized. So I wanted to focus in on just North Carolina on this goal. And you see here the two markets that are really doing the best. Dark blue is doing better than light blue, is doing better than white. So here you see kind of the areas where this particular map for June of 2026 suggests you invest in. So you're interested in getting into real estate. You're currently contemplating, should I get started, or you're thinking about picking up your next flip. Consider this, right? This map highlights where the most sales are happening in June of 2026. So you see that Raleigh's dark red. Charlotte, is fair to say, is number second. Wilmington, Brunswick County, and Greensboro are in a good third position. And then comes Durham, Jacksonville, Greenville, and Fayetteville. Harnett County is here. So those are the county. Asheville is in an uptick. Surprise to me, and that may be because due to the floods that we have seen a while back, that some of the people now are having to sell their property or decided to sell their property right now. All right, let's look at some realtor data. You know, I like my realtor data. Charlotte home prices. So this is listing what is the average medium home price for a listing, and what's the medium square foot price. Here you see the difference between Raleigh and between Charlotte. It's weird that the medium sales price in Charlotte is lower and in Raleigh is higher, but yet the square foot price is a difference. This means to me that Raleigh is building bigger homes than Charlotte is. So Charlotte might be doing more condos, more apartment buildings, and so on. Here's the entire list. If you want to look at that, you can go to realtor.com. Wanted to look at properties and rental properties because I thought it was very interesting. So that you see that the properties for rent, fewer investors are putting their properties for rent, or there's less rental properties available. I hope it's not because people are looking at my videos and saying, oh, because Erik is saying rentals are less advantageous, they're not doing it anymore. But you know my whole thing, right? Like I've been saying now for the last 2 years that I'm getting out of the rentals because my property taxes are rising, my insurance costs are rising, but my rents are not keeping up with the additional cost. And maybe this is more investors are seeing that, and that's why people are getting out. You see that here in Wilmington, there's a big drop. That was a surprise to me. And big uptick. You see a big uptick in the cities where it might still be cheap to buy. Although Mooresville, of course, is not cheap to buy. It's one of the hottest markets currently in North Carolina. 2 more articles to share with you. When is the best time to sell, right? Or yeah, I wanted to look at the best time to sell because, man, I know May is always the best month, but July. PJ is on this call. She has been my realtor for the last 16 years, and she always said, "Hey, Erik, it's going to get the 4th of July. Don't even worry about your property." And data right now is showing that you know, she is absolutely right, because what you're seeing is that July was completely dead. Like the amount of people I have recently heard that are saying, "Erik, I am there. There's just nothing happening for me anymore in July." Is insane. Although I did speak to my realtor in Raleigh, my realtor that is currently trying to sell going to sell my new builds. Luckily, showings are in an uptick, and when showings are in an uptick, hopefully we're seeing offers being in an uptick. Let's see if this decrease in oil prices is going to help. Last article I wanted to share, or I can just tell you, the 10-year Treasury is also down by a fraction, not even a lot, but by a fraction. It's at 4.6. We normally follow the 10-year Treasury about 2 points, so at 6.6. So that's pretty normal. Again, the reason I wanted to highlight that is we see oil prices dropping, and when oil prices drop, we see the 10-year Treasury kind of going down a little bit, and hopefully, because after last week's Fed report or meeting that the interest rates were not going up, we saw a tremendous spike in the 10-year Treasury, and that would have meant that interest rates could potentially go to 7%. hopefully this dip in oil prices might mean that we're not going to 7% interest rates, because to me, that means that will completely kill the entire real estate market for medium home sales prices. Enough about that. That was me going on for 15 minutes. And now you know it. You are already putting things in the chat, or no? I'm having audio issues, Brian. Brian, can you hear me? Okay, perfect. He's waving at me. That means he can hear me. I'm not sure you can understand me because of my accent, but at least you can hear me. That is, I guess, gets a win.
I'm catching it. I'm picking it
up. Awesome. Well, anybody with a question? I had my drink somewhere, but that's gone. So good luck with that. Anybody with a question? How can I help people? This is Q&A. So questions and answers. Who has a question for me? Hi. Well, good night. See you later. Thank you so much. Appreciate you guys. I know going first is always scary.
So Erik, the data, I kind of logged on late and was messing with the audio. A lot of it that you were showing, how do you get access to that? Or you have to be a realtor, or?
No. I don't like to show platforms. I did it once, or my first few meetings, I showed data to a platform that we had paid data for, but I want to make it accessible to everybody. So I just go to realtor.com, and I can actually I can pull up a screen right now. Let me so let me see here. Let me share my screen real quick. So what I do is, for those that know me, I always say that I'm dumb, but you can even go. Let's do Redfin. What market are you investing in, Brian?
Well, I've just got 2 properties in Fayetteville, but I'm not sure I'm going to stay over there. So let's just say Wake County, the triangle.
So I just type in this, and then Redfin. First of all, I'm getting, now with the new Google, you're going to get a lot of AI, an AI that is showing it. You can, Gemini in this case. So here, if you click right here, normally this would be the first link that comes available. I think that is this link as well. Nope. But if you click, now I clicked out of it. Anyway, if you search that, here you see kind of what is happening and the overall data. Now, this is data that they get from the NAR website, the National Association for Realtors, or from any of the websites. So you see that home prices for Wake County year over year are down by 1.5%, and that homes have sold are up by 5.7%. The way I look at this data is I really don't care about the median sales price, because I can be in Southeast Raleigh and trying to get $481,000 is like, good luck. Or I can be in North Raleigh, and where if I would sell a house for $481,000, people would be like, oh, that's a steal, right? Yeah. What I want to know is these 2 things.
Okay.
How is the graphic looking, right? Data, and I'm going to pull up Fayetteville so you know what I'm looking at, and it always feels like I'm bad talking Fayetteville a little bit, but I just don't see the transaction. And there's a lot of people that make a lot of money in Fayetteville, where and there's always a lot of people in a certain market that make a lot of money, because you make your money when you buy right.
Yeah.
So keep that in mind. So what I see here is that despite the fact that real estate is struggling, the peak in May and July is still trending up. So I'm seeing a higher transaction than year over year, the transactions are rising. And that's what this number is saying to me as well. So that's what I want to see, because if I do Redfin and I do Fayetteville sales, again, Gemini comes up. I can click on this. Oh, that's not what I wanted to see. Maybe I go to this. Nope. So now I have to look for the link. There you go. Nope. Oh, yo. Redfin. Yeah. Sometimes you have to look for it. Sometimes it is easy. Hey, yo. There you go. Data. Let me see here. There you go. So if I look at the home sales, you see the difference? You see the difference, Brian?
Yeah, I do.
So the highest point in May of 24 is lower than June of 25, and May 26 might actually be as high as 25. So it's kind of like, for me, it's kind of trending down. So then you want to ask yourself, is that a market I want to get started in?
Yeah.
Now there again, in any market, PJ and Rocky Mount, you and Fayetteville, in any market, there's people being very successful in that particular market. But if you're getting started and you're getting your feet wet, you want to get into a market that is on fire. And I say on fire. Is there any
why I got these properties in Fayetteville? Well, let's leave that alone.
Yeah, there is, you need to know, and you need to know your market. And that's when also why I ask, when people ask me, how do I get started? As I tell them, get rid of the shiny object syndrome. Because anybody on this call makes a lot of money doing what they're really good at. So you got to focus on one zip code and one zip code only. And so when I got started, it was Durham. And after Durham, I went to Rocky Mount, and I focused particularly on a zip code in Rocky Mount. Knew that area, and I grew my portfolio. And then I went to other cities. And then I went to Fayetteville. Then I went to Sanford. And so I went to Salem. But focus on the zip code, so you know that when a property hits the market, it flies off the market. Because you can say all you want right now, but properties that are priced well and priced aggressively still fly off the market. Last week, I bought 3 properties, and I am on the contract on 1 more. And yes, one of those was with Marianne, where we're doing a new build. So, right, there's still people buying. You just need the price right. And let me explain to you what I mean with that. So one of the properties that I have on a contract, or that I bought last week, the appraised value, external appraisal, appraised value came in at 650. I bought it for $450. It needs $25,000 worth of work. Two weeks of work. And I did my math, right? If you do 650 at 75% is 475. So again, I always start on the end. The end is always the start. 650 is the end. I'm going down. Okay, 650, I need to be at 475. So 475 minus my repairs of 25 is 450. That person, who's my insurance broker, happily accepted 450 because he's moving into a new home. He just wanted the money and wanted it out. My realtor came back and said, Erik, the appraisal report is right. You can sell, based on the data that I'm seeing, you can sell it for 650. But if you want to have multiple offers in a few weeks, I suggest you put it on the market for $599. And I'm doing it because I'd rather take a quick money. I call, as you guys know that follow me, I call that my cocaine money. I'd rather take a quick hit, have money in my pocket, get that loan off the table. Then I'm trying to push the market at 950, trying to say, oh my gosh, why is my property not selling? Let's put it under the value and let's see if I can get multiple offers, drive the price up by a multi-offer situation. Guys, you need to run your numbers. Another property, it's on the MLS. I can show you if you want. It's on the market for $650 for 2 days. I offered $585.
Where would you tell the newer people to go find their values? I know I heard you say, find your zip code. right? But then you've got Redfin, you've got Zillow, you've got, you know, and you know, they all kind of float around. And so when we try to get what we think is the most definitive potential value for a property, you know, where would you say the newer people go say, okay, that one's worth 525, and then you start your math.
So you start again. You start with wherever you feel most comfortable. So it is, look on the Redfin, go to the markets that you're interested in, and let's pull up. But I saw a recent report that Nightdale, Wendell, and Zebulon are in the top markets nationwide of transactions. D.R. Horton, what are the other, Lenore Housing? They're building lands, getting all the tobacco farmers out, and they're putting in new builds. Friends of my church moved there, and if I'm a builder, right? But I wouldn't be proud of their product. I might have to do a whole different job, because they bought an 800,000. Now it's almost 800,000 that they bought for the house, and their downstairs shower is just a fiberglass insert and tile against the whole wall. Their downstairs is built on slab. Slab is the cheapest way to build. It's built on slab. Everything is LVP on the downstairs. Huge garage on the downstairs, so that you don't have to build a lot of LVP or put a lot of LVP in. And then the entire upstairs is huge with carpet. That's very cheap to build. So I need to reconsider my my way of building. But I would start in Wendell. I would start in Nightdale, Zebulon. I would start in, I mean, I can start in Raleigh. I wouldn't do Durham, although people might be doing and can be very successful in Durham as well. Why not Durham? The net migration into Durham is not as great as in Raleigh. The net migration into Durham is actually very low. But I say all of this again, Brian. It's all when you purchase. If you make sure that you do not go over the 75% LTV or ARV. LTV stands for loan to value. ARV stands after repair value. If you make sure that you don't go over 75% of the future value, you can do a BRRRR. You can just buy that property, rehab that property, rent that property, and refinance that property. Or you can sell it for a profit.
Yeah.
Had too many people say, too many people are so desperate right now, they force themselves into the market.
And Eric, that's great. I guess where I'm still kind of stuck is where do I go to find that value? Where do I find that V in the LTV and the ARV?
I'll run numbers with you here. But you start. Let me show you. So first you go to Zillow. I'm pulling up a property that I want to show you that I bought, so we can do the backwards math. I don't know why it's not pulling up anymore. Yeesh. Am I? Oh, yeah. It would help if I type in the right address, right? That's why I tell you guys, I'm the stupidest kid on the block. All right, here we go. We're gonna do the we're going to do it backwards. So I'm going to show you the deal. I'm going to show you what I was looking at, why I did what I did. And I hadn't even put a gun against people's head. All right, here we go.
Yeah,
So
there you go. Okay, thank
I
you.
am on the contract. I'm on the contract on this property. This is the property on the MLS. Everybody on this call could bought it. Anybody on this call could have made an offer. I'm on a contract for $585. Here we go. It is on the market for 24 days, right? A lot of views. I like this. Brian, remember what I always tell you. If it's hard to buy, it's easy to sell. If it's easy to buy, it's hard to sell. What I like about this particular property is, man, if I don't buy it, somebody else is going to buy it. It has 2,600 views and 181 saves in just 3 weeks, right? Like that number. So why did I get it? You look at it and you're like, Erik, what are you going to do to it? Yeah. It's outdated. Thank you, Amazon. Thank you, Airbnb. Thank you for all the platforms that turned our world into as easy as possible. What do I mean with that is people are used to walk into a house, drop their bags, and now they can do whatever they want. They don't want to pick up a hammer anymore. They don't want to do nothing. So I look for homes like this where it looks like grandma just moved out, right? The bones are good. It just needs updating. So all I'm going to do is I'm going to do updating. All right. So I look at it. They did some nice job with AI pictures in here. What they're not showing is I don't think they're showing it. Let me see. But you see, like, hello 90s. 90s haven't left the house yet. Like none of this shows that the 90s have left yet. Which there's nothing wrong with that. It's just people won't be buying it, right? People won't be buying it for that price. All right. So I'm looking at this. Oh, this is the basement, drop ceiling. I'm like, I can take the drop ceilings out. Whatever utility line is there, I can paint it black. Whatever, make it modern. There's additional room for me to buy if I have to add value. Oh, here is the issue. Okay, right now I'm seeing the real issue. There is a pool, if you can call it a pool, and there's trees growing into it. Wow. Now I know nobody wants to buy this. So I go back and I zoom out. I go back to my search and I zoom out into this neighborhood. And this is the neighborhood. I'm staying in the neighborhood first. What do I see in the neighborhood? I see in the neighborhood a $1.2 million home for 4,200 square feet. Oh, I should say that I want to do pending under contract. Apply that as well. I need to say that I'm looking at 3,700 square feet. Here is one for 950, and this is actually makes me super excited. This is my comp. This is my comp. You see, it's 3,500 square feet. So this is super close to what I got square foot price wise, and it's been on the market for 74 days, and it's now on the contract for 940. Well, it still says for sale. Zillow only pulls it up when I have it as pending. So, Brian, I'm going to do the math backwards now. So, just based on that one comp, and you don't go off of one comp, but here's what you're going to do. You go with 950 times 75%. I'm at 712. I cannot go over 712. We calculated that we need about $120,000 worth of work. So 712 minus 120. I'm at 592. That's why I came in and offered 585. Okay, so now let's run my profit in another way on this particular deal. If I sell it for 950, which I will sell it for more because I have a pool and I have a basement. Basements don't always add much more value, but in this case, it's something that the house didn't have. I have an in-ground pool. 950. And then I say, okay, 950, I have a realtor that I have to pay, and I calculate my realtor fees at 7%. I know it's 5, I know it's 6. I'm at 7 because there is some attorney fees I have to pay. So at 7%, I'm going to be paying an agent $67,000. 950 minus 67,000. I'm at 883. 883 minus my purchase price of 585 minus my rehab, my profit, not calculating the holding fees, not calculating the taxes, not calculating utilities. My profit on that particular deal is $178,000. So do you think I care what the real estate market is going to do? Because I can put that on the market for $799, way under the value, and I still make a little bit of money.
Yeah.
And that's why I don't want you guys to force yourself into the real estate. This is the deal. This is the market to pick up deals. I did not put a gun against that lady's head. She's happy as can be. Yes, the realtor wanted to have a call with me because he didn't believe in hard money loans until I told him that just last year I did $17.5 million in new loans. He goes, okay, we'll sign the contract. Yeah. And off we went, right? She's happy. I'm happy. I'm going to make money. She understands that because of the condition of her house, it's already in the listing. And that's also something you can do, right? You can search for these list terms, but in her list terms, in the realtor's listing, read the first sentence of this listing.
Yeah. Yeah, which says they already had an awareness. Somebody's got to update this place. Right.
And then when you run your numbers, you're going to call your agent in the market. I know PJ's on this call and I call her out a few times. She's been my real estate agent, but you call your agent and say, can you verify my numbers? Then when they verify your numbers, because agents are getting paid on commission, you say, okay, make an offer on my behalf. But you start doing your homework first. You run your numbers first, and then you go to your verify with a professional, and then you go make an offer with that professional that is supporting you. Lead with loyalty, and if loyalty is reciprocated, you have a good relationship. But if loyalty is not reciprocated, you move on to the next one. Sorry, Marjan.
The pool.
Yeah.
Does that work for you or against you? Or like I, as a home buyer, would not want a home with a pool. That comes with risk and liability, I think. Where do you stand on that?
Yeah. Sorry, PJ. I'm so happy that you're on this call. I'm going to call you out again. PJ and I looked at a flip in Rocky Mount with a pool. And because of the pool, I walked away. But in this particular neighborhood, in this particular price range, if the pool works out, I'll take the pool. If it doesn't, I'll put dirt in it.
Okay, that was my next question is, I've seen videos with, rehabbers, they just fill in the pool. This is in California, in a place where people just don't use it. But is that more expensive than fixing it up? Because this one had trees leaning into it and everything. So for a reasonable price, you could fill in the pool?
I'm paying $300 for a load of dirt, a cube of dirt. So it would cost me $3,000 to fill it in.
Is that enough to just fill it with dirt? There are no environmental issues you have to worry about, nothing like that?
We're about to find out. No. As long as you have no tires in there and you have no oil in there and stuff like that, of course, I was about to buy a property in Raleigh, and then we did I don't know how we got to find out. We either did a soil test or somebody was digging around and they found a bunch of tires, so we walked away from it. you know,
Mhm.
and yeah, make sure that you, of course, don't throw tires in there. But you can, in theory, you can put that, you can break down the concrete and put some of it in there as well. You have to have a clear layer of dirt, but yeah, you just fill in the dirt. You take the plastic out of it, but there's just a concrete base, and then you have to. Yeah, I think I have to look into it, but you have to break the bottom so that water can seep through it.
Uh-huh.
You know,
That's what I was wondering.
otherwise you have a mud pool. You know, when it starts
Right.
raining and you just put dirt into a pool, the water can go nowhere. And then when it rains, it fills up, and all your dirt is soaking wet. You have a swamp in the back. So yeah,
Well, there's usually also concrete around it.
Yeah.
Around the pool for people to walk on. Do you remove that, or do you just put
oh,
dirt on top?
let's figure out. Can I throw my concrete of the pool in the pool when filling it up with dirt? It depends. Yes, you can. You can pour concrete and fill it up. So there you go.
But you still got to hire somebody to break the concrete up. That's not
Yeah.
an easy task. Yeah.
And again, and I was, when we, before this recording, right? You and I were joking around that drug house we're buying, that if we run the numbers, we should keep that drug house because a drug house makes more than a new build. All kidding aside, it's all in the numbers. Like if it's cost me $80,000 to fix the pool, or it cost me $20,000 to fill it in, I'm going to fill it in.
I think it depends on the marketability of it. I just think that a pool gets in the way more than it helps.
I think
Most people don't want a pool.
There's people that pay for it, right? I would pay for it. But I have young kids. I would pay for it. In this, like in the summer, the only thing my kids can do is sit inside in the AC or fish in the pond that I have. Or now they can jump into a pool, right? So I think it depends on where people are in their stage of in their life and stuff like that. There's people that love a pool and will pay for it.
you don't get a lot of resale value out of it. My wife and I, we had pools in both of our homes. And it depends, right? If you're in a neighborhood where you're exclusive with a pool,
Yeah.
you get a little value. But if every neighbor 2-3 doors down has a pool, you don't get any more value. But Erik, the thing I noticed here is you're going in there and you're not sure what the outcome of the pool is, but you built yourself a big enough margin that if you missed it by 20-25 grand, okay, I got it wrong.
Here's what I always say, Brian. And that's why I calculate my realtor fees at 7%, another 5%.
Yeah.
I rather aim high in my cost, low in my ARV, because if I think I'm gonna make $178,000 and it turns out to be 150, I'll be disappointed.
Yeah.
Although 150 is life-changing money, can be really a lot of money.
Yeah.
But instead of going to a steak restaurant with my wife, I have to take her to McDonald's because I am thinking I'm making less than I anticipated. So that's why my costs are always high. My ARV is always low because I rather think or calculate that I'm making $178,000 and end up with 178 than I calculated at 178 and I end up with 160, right?
Yeah.
I want to, and to that other property that I just said with the ARV at 650 and I'm putting on the market at 599, I want to be able to do that. I want to be able to say, hey, the market is not strong. The market is, and guys, we're not going to go to crash, right? Like I see people putting on Instagram, oh, unaffordable. They put 2008 unaffordability level here, and they put 2026 unaffordability level here. We're going to crash. No, we're not. You know, because we're seeing that as soon as rates drop below 6% in February of this year, we saw a 30% spike in applications. It's not that people don't want to move; they just can't afford it right now. We just need interest rates to drop or prices to come down a little bit. It's that simple. But prices won't go down because inflation is up. So anyway. Any other people? I know, PJ, you might have some questions. You're trying to get, you're new. Anything I can answer for you or anybody else on the call?
I was just kind of listening in. I don't know. I'm taking it all in for my first one, but
There you
could
go.
you maybe explain the burr method a little bit more? Is
So
that totally
no, that's a great question. So again, always stay at 75%. And the BRRRR stands for buy, rehab, rent, and refinance. So any lender, any bank, other than a hard money person, right? So you have people that will, in this case, Ed is on the call, so I might be knocking on his door for money for this property in Raleigh. So in this case, I'm going to be looking for the purchase price of $585 and the rehab money to fund my entire project on this Raleigh deal. And then when I'm done, I have two options. You will always want to have multiple options on your project. Because I'm at 75% LTV, the value being $950, I am at 712. Because I am at 75%, I can say, hey, bank, PJ is my tenant and she's paying me $5,000 for this property per month. Can you do a DSCR loan, a debt service coverage ratio loan? Then they will come in at 712. They kick out at the hard money guy, and I, as the operator, we all are operators. I, as the operator, have a property that now a tenant is paying down my mortgage. My hard money guy is gone, and I own a property that somebody else is paying down. So if I don't sell it for $950, I have at least another exit strategy. Now here's what I don't want you to do, but I see a lot of people do. They put it on the market at $950. They don't sell it, and they say, okay, I'm going to try it at $930. They don't sell it. They go to $899. They don't sell it. They're like, pardon my French, and they say, shit. Now I need to do a DSCR loan because my hard money guy is frustrated with me. He's knocking on my door to get his money. Then they go to a DSCR lender, and the DSCR lender says, okay, great. We can do it. But we're going off of the last list price. So now the DSCR lender is going to look at $850. Or $899. $899 times 75% is $674. That means you're in it at 712. The DSCR lender wants to give you $674. So there's a gap of $38,000. And whoops, all of a sudden you're stuck again. You're like, shit, now I have to sell it. So before you start lowering the price on your listing, consider be very aware of what your 75% LTV is, your loan to value is. So if you have the option, really buy properties at 70% LTV instead of 75, because then you give yourself that 5% margin to potentially drop the price before you have to apply for a DSCR loan. So the BRRRR method is you buy something, you rehab it, you put a tenant into it, you refinance it without having to use any of your money. And then a tenant is paying you more than your mortgage and then your PITI payment is per month. Did I explain it well? Perfect. Okay.
Sorry, you just reminded me of another situation that I heard of just the last week, that someone had rehabbed a house, put it on the market. She had a buyer. It was pending, and then the buyer couldn't get the loan. And so it went back on the market, and I'm told, like, this is the kiss of death, right? Because now it's been on the market, it came off the market, and now other buyers are looking at that and going, oh, there must be something wrong. Is there a way to get around that? Like, can you ask the real estate agent to not make it pending until the loan has been approved or anything like that? There's nothing you can do to make sure the loan was approved before. Wow.
PJ's already laughing.
That's why you get due diligence money.
That's why you get.
The only remedy. You can't,
That's why.
Pen debt.
Oh, that's bad. I mean, even if you get due diligence money, I feel like that doesn't even make up for it because I feel like that can really reduce the value of the home, the perceived value of the home. Yeah.
Yeah.
So PJ, would you tell someone that like don't accept contracts on people who don't have pre-approvals?
Oh, yeah, no, you never do that. You always want to see a pre-qualification letter or pre-approvals are better, but sometimes you just get the pre-qualification, but you just need to know that they at least are qualified to get financing.
So as
Give you your meeting back, Eric.
So as the seller, I could require that they have a letter of approval from a bank, but I can't specify the amount.
It normally has the amount. And sorry, my internet. I don't know. I'm trying to call my wife to see if the kids are on some type of device that is draining the internet. No, so by law, you have to put the property pending, and they normally get a pre letter for the amount that they're getting a loan for, or purchased for, or they have to make up the gap, right? Like if they have a $200,000 pre-approval letter, they're buying something for 300, you can ask for bank statements and stuff. Whatever that the entire gap. So if they're buying $1 million home, they can either show a bank account that has that, they can show a pre-qual that has that, whatever makes up the entire amount. But one thing you do is you put it in bold letters, buyer backed out due to financing issues, right? But that's also when you have somebody on the hook, you try to really work with them. Is there a lender you can advise them on a lender? Is there somebody you can work with, right? Like, are there other things you can do? And that's why I always advise people, when you negotiate, especially during COVID, but this might not happen now. But say on that house that I'm going to put on the market for $599 with the value of $650. Say this first day I get a full price offer with a strong DD, and you would be like, yes. Never accept the first offer. Never. The first offer is often the strongest offer you're going to receive. But what I mean with that is, say, if you like the price, say I want a stronger DD, or you want a shorter EMD. You want to go back and forth a little bit. You want to make sure that make sure that the buyer has to fight a little bit for the property. Because if they offer you what you wanted and you accept it straight away, what do you think they're gonna? How do you think what is their thought in their mind? What would they be thinking? Please wait in.
I could have got a better deal.
Brian is sitting there on my screen, so that's why I'm pointing there. They will always be wondering, what if? What if I offered 570? What if I offered 560? What if? So what they're going to do is they're going to nickel and dime you during the DD process. They want to have all the repairs done. So always negotiate in the beginning. Always, and don't lose them, but always negotiate with them. I like to give them options. And as a matter of fact, that deal that I just showed you in Raleigh, I got options as well. I could buy it at 585 with a 21 day DD and 30-day close with 1,500 DD. Or I could close in 45 days with $3,000 DD. Here's my $1,500. It takes me 2 weeks to get everything in order, so I'll take 30 days. Hi, what else?
Hey, Eric, I didn't know if there was anything specifically that kind of turned your trajectory towards like teardowns and infill lots and kind of away from like the standard, cosmetic flip, and then you kind of just, as your career progressed, you kind of wanted to try something new or different? Or I wonder if is there anything that one thing that kind of pushed you towards that way?
Yeah, so in 2024, I almost lost my business because I was heavily into Section 8. But what I saw happening in my business, and this might not be for every business, but I saw that a lot of people got pre-qualified for Section 8 because during COVID, the government had to push people into housing, right? Like housing was the main priority. So there was a lot of people that had supplemental income, had a lot of support. And some people that couldn't work during COVID. And then people start working, and then they start losing the support from the government because they were like, okay, you make your own income, see you later. And then people were like, what? I had an income and I had supplemental income from the government, and they're like, oh, shoot, can't afford it anymore. So they were in a house that they couldn't afford. That was one issue. Other issue was, particularly in Rocky Mount. Rocky Mount is known for that there's more than the surrounding cities. There are single family mothers with children that are looking for housing, and in the majority of, so I'm not trying to stereotype, but in the majority of my housing, the single mom then got a partner. That partner didn't always appreciate my property and thought that they would do me a favor by doing a rehab for me. So that happened a lot as well. So I was looking at that point. I was looking for an economic class in our society that would be able to support any type of economic situation, and that's how I got to, hey, throughout recessions, it is the wealthy people that are buying. So that's why I moved to properties that had a bigger profit margin than I normally did. And that's why I went into the new builds. And then recently, because there's just so many good deals on the market coming on the market, I now buy these lipstick cocaine money flips, as I call them, right? I buy these quick flips to while I am building these properties and finishing these properties, to have some supplemental income coming in to do that. So yeah. So it's a numbers game. It's like, where does the economy move? Where is it going? Right? Like I'm getting out of the rentals, but there might be a time again that I'm getting into the rentals, but because it might be a better time to get into rentals again. But because rents might be picking up, property taxes might be stabilizing, insurance might be stabilizing. It's just all like what makes sense for your business right now, right? So I hope that answered your question.
Yeah, it did. Thanks.
Thank you. Absolutely. Anything else? We're getting a little to the end of what we had scheduled for. I can stay on a little bit if there's more questions, but anything else? Well, guys, I appreciate you. I do admire that you are thinking about real estate. If you want to get started, again, the market is slow now. So now's the time to pick up deals. Mariana and I are doing our first deal. So jump in, be safe. Make sure that you run your numbers conservatively, right? Run it with high cost, low sales price. And if you still make a lot of money, then just do it. But try to talk yourself out of a deal. Don't get yourself into a deal. Try to talk yourself out of it. And if it doesn't make sense, right? If it doesn't make sense that you don't do it, then go ahead and do it. But if there's too many arguments that you say, then just don't do it. Then be safe. So thanks for joining. Have a good night. And I'll see you guys next month. Tria has a bunch of events, including the main meeting next month or next week. And that's a good one. A guy flying out from Phoenix, Arizona to be here. So hope to see you during the main meeting.
Thanks, Erik.
See you
Thank
guys.
you.
Good night. Thank you.
Thanks.
Bye.
Yeah.